It's another day and another upgrade coming in as far as Indian equities are concerned. Now remember, in the recent past you've seen Morgan Stanley turning bullish, you've seen Goldman Sachs turning bullish, you've seen BofA Securities being a bit cautious, but again they've also been quite bullish as far as Indian equities are concerned. Whole host of international ground rates are liking Indian equities at this point of time, and today it's the turn of Credit Suisse, who have gone ahead and upgraded their India rating. So what Credit Suisse has done is that they've upgraded India from an underweight stance to a market weight stance. India, according to them, has a very strong EPS growth profile, and remember Q2 earnings was quite a positive surprise across most of the parameters for the entire universe. We are also talking about Credit Suisse taking a note of the big improvement seen in current account deficit as well as the balance of payments. They believe that the Indian market is one of the few markets that have a significantly more potential for monetary easing when you are comparing it against most of the markets. Now remember, Goldman Sachs too had come out with a note recently where they actually upgraded their Nifty target to 14,100. What they're saying is that again they're overweight as far as their India stance is concerned. They believe that the main reason for hiking their weight or hiking their stance as far as India is concerned is that they are seeing a very strong macro, cyclical and earnings recovery coming about, helped by the positive vaccine outlook. Also they are saying that they expect earnings to be primarily driven by strong profit growth, and this is something that will aid the returns for equities. What they're saying is that they're seeing leadership rotation towards banks and cyclicals to continue given the improving growth across these sectors. What they've done is they've upgraded their private banks and domestic cyclicals like autos. And not only that, they've upgraded their materials outlook, that is cement as well as metals, to a overweight stance. Morgan Stanley, again, Rhythm Desa of Morgan Stanley has upped his Sensex target. It did make news, but let's go through the rationale for the upgrade. The new BSE Sensex target from Morgan Stanley is 50,000 by December 2021. They believe that India remains in a bull market that has started in March. They believe that the equity market may have a lot more legs before it tops out eventually. The December 2021 target implies almost a 15% upside from the current levels. They believe that the broad market could now go ahead and beat the narrow indices. So what Morgan Stanley is saying is that it is now time for the broader markets, the mid cap and the small caps, to join the equity rally party that's been going on since the lows hit in March. What they're doing is they have added SBI to their focus list of stocks, a Morgan Stanley focus list, while they have removed Apollo Hospitals of there after a sharp outperformance seen over there. Their overweight stance continues on consumer discretionary, industrials, financials as well as utilities, where they're continuing to see quite a bit of a value proposition. Overall, extremely bullish notes coming in from multiple brokerages as far as Indian equities are concerned.